Hello, and welcome to the CBRE Clarion Compliance Manual and Code of Ethics training. In today's training, we're going to cover the Compliance Manual, Code of Ethics, certain governance topics, information security policies, and a few business continuity procedures. First, we will begin our discussion with exploring where policies come from. The first set of policies are the CBRE Group Standards of Business Conduct, which outline the legal and ethical policies all employees must follow. These policies address employee conduct with respect to each other, our business partners, clients and competitors, CBRE's resources, and our communities. The CBRE Standards of Business Conduct articulate the RISE principles. The next set of policies are the CBRE Global Investors Investment Management Policies and Procedures, otherwise known as the Red Book. This document serves as both a compliance manual and operations and governance manual for the global investors business line. It includes policies and procedures related to governance and authorities, the investment process, affiliated transactions, personal conduct, and the formation of new funds, offices, and business. The next set of policies are found in the CBRE Clarion Securities Compliance Manual, which contains regulatory policies and procedures for our advisory services. The Compliance Manual policies address investment transactions, personal conduct, client accounts, safety of assets and information, and marketing. These three core sets of policies have unique elements as well as commonalities. Where the three sets of policies overlap is primarily in the area of personal conduct. It's in this space where we'll find the CBRE Clarion Code of Ethics. The CBRE Clarion Code of Ethics is a separate, standalone document within the Compliance Manual, which outlines the firm's business principles and values and summarizes the personal conduct policies relevant for all Clarion employees. The Code of Ethics addresses fiduciary duty, personal investments, personal conduct, and conflicts of interest. As introduced earlier, the CBRE Group Standards of Business Conduct outline the legal and ethical policies all employees must follow. These standards also articulate the business principles underpinning each of these policies. These principles are known as the RISE principles, and this acronym is for respect, integrity, service, and excellence. These standards are non-negotiable, and they're a commitment to do the right thing when acting on behalf of CBRE. They're available on the CBRE intranet site, and they are attached as an appendix to the CBRE Clarion Compliance Manual. Also introduced a moment ago is the CBRE Global Investors Red Book. The Red Book sets forth the policies and procedures and compliance requirements for the global investors business line. The Red Book covers the global investors management authority and committees, real estate investment process, global and indirect business lines, personal conduct policies, operational policies, legal compliance policies, and certain CBRE group corporate policies. The CBRE Clarion policies overlap with the Red Book. The CBRE Clarion Securities Compliance Manual contains the regulatory policies and procedures related to how we perform advisory services. All employees must initially and annually acknowledge acceptance and compliance with the Compliance Manual. And it's available internally on the N-Drive, and it's also available in the Code of Ethics reporting system and on the Unite site. The CBRE Clarion Code of Ethics outlines the firm's principles and values and summarizes how company policies will affect certain types of personal conduct. All employees are required to comply with the conditions of the Code of Ethics. And like the Compliance Manual, all employees must initially and annually acknowledge acceptance and compliance with the Code of Ethics. It too is available on the N-Drive, as well as in the Code of Ethics reporting system and on the Unite site. The Clarion Compliance Manual contains certain policies that are relevant for all employees, such as those listed here. The Compliance Manual also contains policies that are directed toward activities and procedures for specific departments. For example, members of the investment team will find these policies essential for their day-to-day activities. Similarly, the marketing and client service team will operate in accordance with these policies. And the operations team will follow these policies and procedures. You will note that some policies are relevant for multiple teams, acknowledging the interdependent relationships and roles. The policies in the Compliance Manual are updated periodically, and most recently we revised several policies. Some of these revisions are material, such as revisions to identifying and dealing with affiliates, conflicts of interest, client complaints, FATCA, prohibited transactions, privacy and information security, and private placements. Our discussion will now transition to the Code of Ethics. The Clarion Code of Ethics clearly states how we prevent personal conflicts of interest and personal conduct from impacting our clients. The Code of Ethics applies to you if you're an employee, officer, director, or independent contractor working for CBRE Clarion or its subsidiaries. As a representative of Clarion, it's understood that you will act with integrity and good faith. You are expected to understand and abide by the Code of Ethics as a condition of your association with CBRE Clarion, and you will be required to acknowledge receipt and acceptance of the code upon joining the firm and then on an annual basis. We are fiduciaries for our clients. This means that we have a duty to act fairly, honestly, and in the best interests of our clients and investors. In recognition of the trust and confidence placed in us by our clients, and because we believe that our operations should benefit our clients, we have adopted business principles that dictate how we conduct business. There are three fundamental principles. First, the interests of our clients are paramount. You must place client interests before your own. Second, you must avoid actions or activities that bring into question your independence or judgment. And lastly, you must act with integrity, respect, competence, loyalty, and professionalism. Under the Code of Ethics, all employees have an obligation to report violations. If you become aware of any violation of the code, you're required to promptly report it to compliance. Violations will be reported to the Management Committee and/or the Risk and Control Committee. An important aspect of a code of ethics is to help maintain the culture of an organization, and that includes responding to violations of the firm's policies. Now, sanctions for the violations of the code may vary depending on the situation. For example, minor violations might result in a written warning, additional training, or notice to your manager. More serious violations might result in undoing the transaction, giving up the profits, or some financial penalty. And in the most serious situations regarding major or repeat violations, it could result in termination. The Code of Ethics has three sections of functional policies, the first of which addresses the personal investment activities of employees. These personal investment policies address some prohibitions and limitations, pre-approval and other guidelines, and reporting elements. Our first step is to identify which personal accounts are subject to the reporting and restrictions of the Code of Ethics. In short, the Code of Ethics applies to accounts where you have an economic interest or control. These will include accounts that are in your name, your child's name, and your spouse's name. Additionally, it may include accounts that are owned by dependent family members or in situations where someone has authorized you to make investment decisions on his or her behalf. Those accounts are under your control and would be considered within scope for the Code of Ethics. If you have an account managed on your behalf by someone else, like a financial advisor, on a discretionary basis, that is, without needing your approval for each transaction, then the account is considered your securities account for the purpose of the Code of Ethics. However, these discretionary securities accounts are subject to certain exemptions in relation to the preclearance and transaction limits that we're going to discuss. Based on which accounts you have an economic interest in or control of, the Code of Ethics is interested in those accounts which can buy, sell, or hold securities. Securities are a defined term in the regulation, and the definition includes stocks, bonds, exchange-traded funds, exchange-traded notes, closed-end funds, derivatives, privately offered investments, and mutual funds that are advised or sub-advised by CBRE Clarion. Notably, the definition does not include money market funds, U.S. government securities, bankers' acceptances, certificates of deposits, commercial paper, or mutual funds that are not advised or sub-advised by CBRE Clarion. If it is not a client of Clarion, then it is not a security. Any account that can buy, sell, or hold securities is subject to the Code of Ethics, and accounts that cannot buy, sell, or hold securities are exempt. Now we're going to review some of the limitations and restrictions on personal investments. You cannot invest in any listed real estate, infrastructure, or MLP security that's considered within the investable universe for clients. We provide a restricted list for your reference, which is updated periodically and available through the automated Code of Ethics system. It's also available through compliance upon request. You should refer to this list before making any personal investment to confirm that the security is not on the list. Any securities on the published lists are prohibited. Additionally, employees will be limited to no more than 10 transactions per month in personal accounts in aggregate. Further, employees are prohibited from executing short sales in their personal accounts. Preclearance is required for all personal transactions. Preclearance is also required for investments in IPOs, private placements, and commercial real estate. There is a 30-day minimum investment period on any personal investment in a Clarion advised or sub-advised fund. And there is a similar 30-day minimum investment period in the CBRE stock fund, which is available through the 401k. All employees must obtain preclearance approval for personal transactions in securities. If you want to buy or sell a stock, ETF, bond, option, affiliated fund, or similar security, you must get preclearance through the automated Code of Ethics system, Protigent PTA. Preclearances are only valid for that day. If a transaction is not completed on the day for which the preclearance is received, a separate preclearance request must be made for the following day. Preclearance is automated and provides immediate notification of whether or not it's approved or denied, and will immediately inform you if it's pending, at which point you should contact compliance. The preclearance function screens against the restricted universe of real estate and infrastructure securities, and it also screens against securities that may be restricted because of material non-public information or in situations in which your trade would violate a holding period requirement. There are 4 exceptions to preclearance. Transactions in the CBRE Clarion 401k, including the CBRE stock fund and Clarion sub-advised funds, do not require pre-approval. Transactions pursuant to an automated investment program, and transactions resulting from dividend reinvestments in corporate actions. Transactions executed by a financial advisor or independent money manager in a discretionary account on a discretionary basis are also exempt from the pre-clearance requirement. Employees are limited to a maximum of 10 total transactions in your securities account per calendar month. The 10 transaction limit is calculated in aggregate across all your securities accounts. Each transaction is counted separately. Round-trip transactions, such as a buy and a sell in the same security, are counted as separate transactions. The Compliance Department reserves the right to grant an exemption to this limit in certain situations, such as account funding, transitions, or hardships. This maximum limit does not apply to transactions executed by a discretionary financial advisor on a discretionary basis in one of your accounts. The Code of Ethics imposes a 30-day minimum investment period, or known as holding period, on personal investments in funds managed by CBRE Clarion. Additionally, the holding period applies to the CBRE stock fund in the Clarion 401k. The 30-day minimum holding period applies to your transactions in the 401k and in any similar securities account. The Compliance Department reserves the right to grant an exemption to the holding period in certain situations. For the CBRE Clarion Global Real Estate Income Fund, or IGR, the holding period is 30 days unless you are an IGR officer, at which point the holding period is 180 days. With respect to open-end funds, sub-advised or advised by CBRE Clarion, the 30-day period applies. The list is here. The Code of Ethics incorporates certain CBRE group policies related to personal investments in commercial real estate. Commercial real estate is any land or building suitable for office, commercial, industrial, retail, hotel, or multifamily housing. That means it consists of more than 4 units. Personal residences, vacation homes, and multifamily housing, which consists of 4 units or less, are not considered commercial real estate. An interest in commercial real estate includes the property itself, as well as any debt or equity securities of an entity that's engaged in investing, owning, or transacting in commercial real estate. So it includes direct and indirect interests. CBRE Group policy has a number of conditions related to disclosures, solicitation, and compensation in connection with transactions in commercial real estate. Any transaction in commercial real estate requires pre-approval by the compliance team. Under the Code of Ethics, you must disclose the existence of all of your securities accounts when you join the firm, and then any time you open a new securities account, and then again annually. The Compliance Department will make arrangements to have duplicate account statements for your securities accounts, including those managed on a discretionary basis, sent directly to us. These account statements will be delivered either in paper form to a secure post office off-site or in an electronic format directly into the Code of Ethics system. Only authorized personnel will have access to your statement information. The Compliance Department may require your consent to arrange for these duplicate statements. Additionally, each quarter you will be asked to report all of your transactions, such as the purchases and sales in securities. This report will require specific information such as the number of units, execution price, and broker. You must complete this report on a quarterly basis even if you did not have any transactions during the period. When you join the firm, you will have an orientation meeting with a member of the Compliance Department. At that time, you will be provided with access to an initial holdings report. The report will ask you to disclose all of your securities holdings and securities accounts. This includes accounts and holdings that are for your spouse, other family members living in your household, and anyone who's given you discretion over their investments. Each year, you will be asked to again reaffirm all of your personal securities holdings. This report will require specific information again, and you must complete the report even if you do not hold any securities in any securities accounts. We now move on to the second section of functional policies in the Code of Ethics, which summarize the policies related to your day-to-day activities in carrying out your responsibilities. The first such topic we will address is material non-public information. You are subject to the laws and regulations related to the use and communication of material non-public information. Some of these laws are criminal and have very severe penalties for violations. In order to understand them, we must first understand what is material information and what is non-public information. Material information is any information that a reasonable investor considers important in making an investment decision, or the information is reasonably certain to have a significant effect on the price of the security. Non-public information is something that's not currently communicated to the general public or market. Something public would be something in a filing, a press release, or publication. The concept of material non-public information is not defined or limited by the source of the information. While company insiders, such as management and employees, are often thought of as a source of MNPI, information does not need to be communicated by an insider to be considered material non-public information. Material non-public information can be disseminated by any number of parties, including those that don't appear to have any direct affiliation with a company or security. Examples would be individuals or entities acting in a confidential capacity for a company, such as attorneys, accountants, investment bankers, or consultants. Individuals or entities that are strategic investors, potential acquirers, potential targets, or affiliates of a company. Our direct property affiliates could be theoretical sources of material non-public information, as well as CBRE Clarion investors or clients. The most common approach to prevent the misuse of material non-public information is an information barrier. An information barrier is designed to prevent the communication of material non-public information and other sensitive information from one department or entity to another. Given the affiliation with global investors and other business units within CBRE Group, it's important to understand the risks associated with exchanging information between the businesses. An open exchange of information between CBRE Clarion and our affiliates is one of the major advantages of our affiliation. However, an unrestrained flow of information could lead to one or both parties being exposed to the risks associated with the inappropriate use or communication of material non-public information. The following scenarios highlight when the information barrier between CBRE Clarion and its affiliates must be enforced to ensure that material non-public information is not inadvertently communicated or restricting Clarion from trading. One example is market and property type information. It's okay for us to exchange information regarding transactions, valuations, and leasing regarding particular markets and property types. However, it would not be appropriate for us to share information regarding specific properties if that information is significant or material to a particular company. Additionally, with respect to company-specific information, discussions of proposed, pending, or otherwise unannounced transactions which identify specific public companies should be prohibited. Similarly, discussions regarding pending or possible mergers or significant transactions with public companies should also be restricted. However, discussions regarding company management, such as experience with management teams and perspectives on management strategies, are permissible. It's not okay to include confidential discussions with management, such as possible changes to the company strategy or possible transactions. And then lastly, CBRE Clarion could be considered a source of material non-public information with respect to its portfolio information. It would not be appropriate for us to disclose portfolio holdings, transactions, or proxy voting decisions to CBRE affiliates unless that information related exclusively to their account. If you come in contact with material non-public information, you have 3 steps to follow. First, you cannot trade any security related to that information. This prohibition extends to your personal account, the accounts of your family and friends, and our clients. You cannot communicate or otherwise transmit the material non-public information to anyone else, including any person internally within Clarion, our affiliates, or to any outside party, until you follow step 3. You must report the situation to the compliance department or general counsel immediately. An easy way to remember the procedures to follow when coming in contact with material non-public information is stop, drop, and roll, which is a technique we learned in grade school to extinguish ourselves if we ever caught fire. That seems appropriate. So stop, as in stop all trading in the security. Drop, as in drop all communications about the information. And roll. Roll on over to compliance to report it. Shifting now to gifts, entertainment, and client contributions. Offering or receiving business gifts and entertainment is a customary way to strengthen business relationships. With certain restrictions, offering and receiving gifts and entertainment can be an acceptable and lawful business practice. Gifts and entertainment or client contributions should not be offered, accepted, or solicited if it creates the impression that Clarion is trying to induce someone, or if it appears that Clarion will be under an obligation. You cannot offer any gift, entertainment, or client contribution if it is a bribe, is dishonest, illegal, or misleading, appears to create an obligation, violates our policy, or is in bad taste or reflects negatively on us. Defining gifts and entertainment is essential to understanding how to apply the policy. Entertainment refers to meals, social events, golf, or entertainment events such as concerts, shows, and sporting events, where the person paying for the event is in attendance. Gifts include any benefit, both monetary and non-monetary, other than entertainment. Benefits include all kinds of services or even the procurement of goods at a price below market value. Gifts do not include promotional items that are under $75. With a gift, the person paying is not physically in attendance. Gifts and entertainment are subject to reporting requirements as well as limitations on the value and frequency. All employees must report any gift or entertainment that is over $75 in value. The maximum value per instance of any gift that an employee may offer or receive is $100. With respect to entertainment, the maximum value per person per instance is $500, and that's entertainment received or offered. Now, both gifts and entertainment have an annual aggregate maximum limit. For gifts, the annual aggregate maximum limit is $500 in total amount of gifts offered to a single person or received from a single entity. With respect to entertainment, the maximum annual aggregate limit is $1,000 in entertainment offered to a single person or received from a single entity. Under the gift and entertainment policy, there are certain expenses that are restricted or limited. Travel and lodging expenses are not permitted within the gift and entertainment policy. Additionally, we cannot offer any gift or entertainment to a government official under our policy. We must refer to our anti-bribery and anti-corruption policy. A government official is any officer or employee of a government, an agency, or an instrumentality of the government. It includes any person acting in an official capacity on behalf of the government, as well as officers and employees of state-owned or state-controlled companies or enterprises. It includes any officer or employee of a sovereign wealth fund or organization, as well as any officer or employee of a public international organization, and certain political parties and candidates for public office. Any gift or entertainment expense associated with a government official requires pre-approval from the CEO or COO, as well as the Chief Financial Officer and the Chief Compliance Officer. From time to time, clients might approach CBRE Clarion with requests to contribute to certain charities or participate in client-sponsored events. We must be careful that we do not use such contributions with the intent to influence decisions to select or retain CBRE Clarion as an investment advisor. In order to evaluate client requests for such contributions, Clarion will rely on a three-person decision team consisting of the CEO, COO, the head of marketing, and chief compliance officer. Employees cannot use political contributions or other payments to government officials with the intent to influence decisions to select or retain CBRE Clarion as an investment advisor for state or local government entities. This practice of using political contributions to influence the selection of an advisory services firm is considered pay-to-play, and it's prohibited by regulation. All employees are subject to our policy, and like the Code of Ethics, our policy applies to you and your family members sharing your household. Under our policy, you must get prior approval from the General Counsel or Chief Compliance Officer before making any political contribution. Additionally, all contributions are subject to reporting after the fact. There are certain limits on political contributions. Employees in the U.S. are limited to $150 per election with respect to state, local, or municipal officials. Non-U.S. employees are subject to a limit of $350 per election, provided that you are entitled to vote for that candidate. Contributions to political action committees cannot be candidate specific. In other words, any PAC that you contribute to cannot be with the intent to support a singular candidate. Additionally, under our policy, you cannot coordinate or solicit political contributions. With respect to your own involvement in the political process, if you wish to be involved with a political party or a PAC beyond simply making personal donations, you must notify the General Counsel and Chief Compliance Officer before engaging in the activity. This policy applies to all Clarion employees, immediate family members, and any third-party solicitors we engage to act on our behalf. Clarion expects the highest level of personal conduct by all its employees, and it's understood that bribery, in any form, is unacceptable. Illicit payments, or any promise of a payment, to a government entity, a commercial entity, or an individual intended to influence any act or decision are illegal and not tolerated. Any gift or entertainment or payment to a government official requires pre-approval by the Chief Executive Officer or the Chief Operating Officer, the Chief Financial Officer, and the Chief Compliance Officer. This policy applies to all Clarion employees and any third party we've engaged to act on our behalf. If this policy applies to you, it also applies to your immediate family members. There are some key provisions of our anti-bribery and anti-corruption policy. Bribes, kickbacks, facilitating payments or grease payments, cash advances, hiring or offering employment or internships, or sponsoring visas are not permitted. Meals or entertainment and political contributions are only permitted with pre-approval. Shifting now to our communications with external parties. We must not make any statement, orally or in writing, to any clients, investors, prospective clients or investors, or the general public, which is false or misleading. Any marketing materials must be generated and distributed in accordance with our marketing and advertising policies and procedures contained in our compliance manual. Further, we cannot misrepresent the services that we or the firm is capable of performing for a client or investor, our experience or qualifications, or the experience or qualifications of the firm, or expected performance of any investment. As a firm, we comply with the Global Investment Performance Standards, or GIPS. If you communicate any performance information to any outside party, you must make every reasonable effort to ensure that the performance information is fair, accurate, and complete, and in accordance with GIPS. CBRE Clarion may permit the use of select social media to disseminate general information about the firm and investment in market-focused commentary and research, subject to certain conditions. Further, certain employees are authorized to maintain personal social media accounts for professional use as representatives of CBRE Clarion. Employees must follow certain conditions associated with a professional social media profile, and they are responsible for the content published through their personal social media accounts. Specifically, employees on social media cannot discuss any securities, recommendations, trading activities, or performance related to CBRE Clarion, cannot conduct or solicit advisory services, cannot communicate with any clients or representatives of clients, cannot claim or facilitate any testimonial for the firm, cannot solicit or discuss or provide any information related to the funds managed by the firm. They cannot post any confidential information or intellectual property from the firm. You cannot reference any client, vendor, employee, partner, or affiliate. Employees are permitted to maintain personal social media accounts for personal use. Employees are personally responsible for the content published through their personal social media accounts. Employees that identify themselves as affiliated with CBRE Clarion or CBRE while participating in social media must use great caution and prudence when posting content and must not post any content which could reflect poorly or negatively on the firm. The third section of functional policies in the Code of Ethics summarizes policies related to your outside activities and affiliations that might present a conflict of interest. It's not possible to provide a precise or comprehensive definition of a conflict of interest. A conflict of interest does not have anything to do with your motivations or integrity. Rather, an activity is a conflict of interest if it creates the perception of conflicting loyalties or could potentially result in conflicting loyalties. You must disclose all situations and relationships which could reasonably be perceived to interfere with your duty to CBRE Clarion or with your ability to provide unbiased service to our clients and investors. You will be required to identify all relevant relationships and situations initially upon joining the firm and then update this information each quarter. Information to be disclosed will include outside activities where you are compensated, receive some other benefit, privilege, or subsidy, and you have the title of employee, director, officer, owner, trustee, or consultant. This includes organizations that are not investment related. It includes organizations that are charitable, civic, religious, fraternal, tax exempt, or for-profit. Additionally, if you have a family member or a similar relationship with someone who is associated with a client or investor, a service provider or vendor, a consulting firm evaluating our advisory business, or a real asset company in our investable universe who also has the title of employee, director, officer, owner, trustee, or consultant, this information will also be disclosed. Every employee has the right to raise any question or concern about an ethical or compliance-related issue, and you can do so without fear of retaliation. If you seek advice, raise a concern, or report misconduct, you are doing the right thing. Reporting concerns allows the appropriate parties to investigate and take appropriate and adequate action. If you have any question or concern about an ethical or compliance-related issue, you have multiple options. Your supervisor or manager is usually a good place to start. You may also get help and advice from any member of the management committee, a member of the human resources team, the chief compliance officer, general counsel. You can also reach out to the chief ethics and compliance officer of CBRE Group or report it anonymously to the CBRE helpline. We're going to transition our discussion now to a topic of governance, specifically the Risk and Control Committee, which oversees risk assessment, mitigation, monitoring, and reporting, as well as conflicts of interest. The Risk and Control Committee is focused on preventing and mitigating the impact from risk events occurring through internal processes, people, systems, and external events. The group monitors the operating effectiveness of our controls, identifies, responds to, and monitors risks events, remediation, and action items. The committee oversees our SOC 1 engagement, or SSAE number 16 engagement, and receives internal risk management and compliance reporting. The Risk and Control Committee is comprised of a cross-functional team from operations, compliance risk, legal, IT, finance, investments, and client service. The committee is chaired by the CEO and advised by the Chief Compliance Officer. The Risk and Control Committee performs certain activities, such as the Integrated Risk Assessment, the Conflicts of Interest Register, overseeing internal controls. They analyze key risk indicators, as well as incident responses. The Crisis Management Team, the Error Committee, and the Portfolio Risk Management Committee all report into the Risk and Control Committee. Errors are a fact of life, but should by no means be pervasive or persistent. It's the policy of CBRE Clarion that the utmost care is taken when making and implementing investment decisions on behalf of client accounts. So, what is an error? An error is any unexpected outcome of a process, failing or forgetting to follow a procedure or control, or a mistake. Errors can include things such as trade or foreign exchange execution or settlement, accounting entries or reconciliations, performance computation, marketing, or even client reporting. When an error occurs, should you fix it? No. Report it, and management will determine the appropriate resolution. So who should you tell and when? First, notify your manager. Then, report it to either the CFO, CCO, or General Counsel. Then what happens? Errors are received by the Error Committee and then evaluated to determine the cause, any necessary steps to correct it, and any process revisions necessary to prevent future errors. CBRE Clarion has information security policies which provide structure around information governance and ensures that our assets, staff, and clients are protected. Our information security policies provide the framework for how we guard and secure our information assets and how we report breaches and incidents. We each have a personal responsibility to guard all confidential and sensitive company information. We must take steps to protect our electronic devices from theft, loss, hacking, malware, and damage. If we become aware of any disclosure of information or loss of equipment, we must report it immediately so security personnel can respond to the situation. Our information security policies cover a number of activities, some of which we're going to summarize now. For example, our password policy. Do not share your password. Do not store your password in a visible location near your workspace. Don't store your password in a file that's commonly accessible, such as on a shared drive. And ensure that you use a secure and authorized password management tool, such as LastPass. Password policy requires that we have a minimum of 8 characters, which is a mix of uppercase, lowercase, numbers, and special characters. Do not make your password easy to guess. High-risk passwords contain the words like password or welcome, and these are security gaps. Don't do it. Your password policy will require that it get changed every 90 days. Additionally, there will be a periodic review of access rights to systems and information. You don't need access to every byte of data in the firm. Data owners, who are the individuals with accountability over data assets, will conduct periodic reviews of users with access to systems and data. Users without an ongoing business reason for access will be removed. With respect to outbound communications, Outbound emails containing sensitive client information should be sent only with encryption, such as through the BizCom utility. Additionally, do not use removable media on your workstation. This presents a security risk. With respect to personal devices, all personal devices accessing or storing firm data must be configured in accordance with CBRE corporate IT security policies, including the mandatory enforcement of access control, automatic screen lock, and encryption. You cannot override or circumvent any security policy enforced by the firm, or use a device that has a modified operating system, such as a device that's been jailbroken or rooted. All firm data stored on your personal device remains the property of CBRE Clarion, and you should have no expectation of privacy. You must immediately notify the Chief Technology Officer if your device, which you use to access or store firm data, is replaced, lost, stolen, or otherwise compromised. When security incidents happen, you must report them. In the event of an incident, immediately notify the Chief Technology Officer or the Chief Compliance Officer. Report phishing emails, a lost personal device, inadvertent email of confidential or sensitive information, a known vendor breach, or a compromised password. One specific cybersecurity threat is malware presented through phishing emails. Phishing refers to any attempt to acquire information such as usernames, passwords, or personal and banking information by masquerading as a trustworthy entity. Phishing is often done through emails that appear to come from a person or organization that you know or trust. Malware is the term for malicious software, such as viruses, Trojan horses, worms, and spyware. Malware is often distributed through phishing emails, where the software is attached or linked in an ordinary-looking email. To protect yourself from being caught by a phishing email, don't take the bait and think before you click. Carefully examine emails and messages to make sure that you are not the prey. Some red flags include the sender's name or group may look familiar, but the email address doesn't look quite right. The message has confusing text, such as, "Here's the information you requested," or it promises you something. A legitimate company would never ask you to send personally identifiable information through email and would not request you to reset or update login information through links in an unsolicited email. Stop and evaluate every attachment and link before you take any action. Do not open any documents, download or execute programs, or click links that come from unverified sources that you were not expecting. Do not trust an email just because it seems to have been sent by a well-known person or organization. Do not send login IDs or personal information through email. Despite all of these precautions, there may be situations where you are caught. If you've been caught, there are 5 steps you should follow. First, copy the suspected email as an attachment and send it to the help desk. Make sure that it's attached and not forwarded so that email headers can be inspected. Do not open any attachments or click any links in the email. The IT team will scan your machine for malware. When instructed by the IT team, change all login and system passwords. And lastly, be smarter next time. The CBRE Clarion Crisis Management Program is a roadmap to assist the firm, management, and employees in responding to and dealing with crisis events that could adversely impact our business, our clients, or our personnel. The Crisis Management Program enables the firm to provide a coordinated, timely, and effective response to crisis events impacting personnel, clients, facilities, technology, and data. It might also be activated to respond to any reported or suspected incident or event that threatens the safety of employees, disrupts our ability to conduct normal business operations, or potentially renders the facilities partially or entirely inoperable or inaccessible. The crisis management program is comprised of policies and plans intended to prevent and respond to certain crisis scenarios, including business interruption and continuity measures, information and technology recovery, physical and personal security plan, and relocation procedures. With respect to business continuity, these are the procedures that will be implemented when the office is inaccessible. So how will you know that we are implementing business continuity procedures? You will be notified by either your manager or a representative of the crisis response team via email, phone, or text. So what should you do? Work remotely from home unless directed to an alternative work location. Who should you contact? Your manager to confirm that you have remote access, what your working conditions are, and what are your available resources. The things you should do in advance: you should make sure that you have confirmed successful access to our systems, the relevant files, and appropriate websites through remote access on the equipment you will be using in the event that the office is inaccessible. You should also have any necessary phone numbers, URLs, or login credentials available to you while using remote access. In the case of a physical emergency in the office, the crisis response team or building management may instruct people to evacuate. In the event of an evacuation, you should follow the following 5 steps. Please note that your local plan may differ in specifics, but the primary steps are the same. First, get up and go. When you hear the building's fire alarm or when advised to leave the building, proceed quickly but safely to the nearest emergency exit. If you are not at your desk when notified of the evacuation, do not return to your workspace to retrieve belongings. Proceed directly to the nearest exit. In the Radnor office, there are evacuation wardens to help coordinate an orderly exit. These individuals are listed here. Two, take the stairs. When evacuating, always use the stairs. Do not use the elevators. While evacuating, do not panic. Remain calm, patient, and listen for instructions from wardens, building management, or emergency response personnel. 3. Get to the designated meeting area. Once you exit the building, move away from it. If there is a designated meeting area for your office, head to it. In Radnor, it is the Upper East parking lot. In Hong Kong, it's Connaught Place. In London, utilize the disperse strategy and move away from the building and await a text message for instructions. In Sydney, it's Wynyard Park. And in Tokyo, it's Hibiya Park. 4. Check in with your coordinator. Once you're at the designated meeting area, check in with your department evacuation coordinator. Upon checking in, do not wander off. Remain with the group. We will take a head count and need the cooperation from all employees. 5. Stay put and await further instructions. Await instructions from a crisis response team member or the evacuation wardens. Do not re-enter the building until instructed. If we do not receive clearance to re-enter a building, the crisis response team will implement continuity measures and will provide instructions to team members. Check with your manager or the crisis response team representative to understand your continuity activities. This concludes our training. We've covered a lot, so let's recap. Today we've discussed the CBRE Group Standards of Business Conduct and the RISE Principles, the CBRE Global Investors and Red Book, the Clarion Compliance Manual, the Clarion Code of Ethics including business principles, policies related to personal trading, material non-public information and information barriers, the policies related to gifts, entertainment, and client contributions, political contributions and pay-to-play policies, our anti-bribery and anti-corruption policy, fairness in communications, our social media policy, outside activities and affiliations, whistleblower policy. We discuss the governance of the Risk and Control Committee, our policy on reporting errors, information security policies, including password and personal device policies. We discuss the risks of phishing emails, what to do to avoid it, and what to do when you get caught, and business continuity procedures. It's almost over, but now we need to know what you know. Yes, there's a quiz. So after viewing this, log in to the Code of Ethics reporting system, which is Protigent PTA, with the link provided in the email announcement, and answer the questions in the questionnaire. As always, questions on policies or procedures are welcome. When in doubt, ask the Chief Compliance Officer. Don't guess. Thank you.